I don't think you can be too bullish if you're in it for the long term. But if you're a short-term trader, it's perfectly in order to jump around from a short to long and long to short all the time and try and second guess the market. And perhaps if we go back a few days ago before the latest jobs report last week, um, it did look like silver and gold were coming under a lot of pressure, as were equities. Well, equities were doing all right, but then suddenly everything flipped. We had the jobs report, and gold and silver jumped up, and equities went down. So all those people who were thinking that gold's going to go down last week were selling it with the hope of buying it back later at a lower price, kind of got messed up by the surprise, the really awful number from the jobs report. So people sort of
Yeah,
rushed to the safety, didn't they? They rushed to the safety of gold. But I think long run, I don't think there is such a word as too bullish because money is going to zero. So
yeah.
where does that leave gold at the end of the day? It leaves it at infinity at some future date. We don't know when that will come. I saw one which was a bit earlier addressed to me,
Yeah,
Mario.
yeah.
One
Go
of your
ahead.
viewers said, "Where does Clive get his $15,000 gold prediction from? Or why 15,000?" I was talking. That was in the context of will the Fed revalue gold at a higher level in order to book a profit? Whatever level they book it at, higher than the $42.22, they'll make a profit.
Yeah.
The reason I got to 15,000 would be is it's enough to pay off this year's deficit and next year's deficit and reduce the national debt a little bit. It won't reduce it that much. But of course, there's plenty of people who think, well, they should do it at a much higher level to pay off the whole of the national debt. I think that's too risky, but I think there's no problem if they do change the price of gold. The question which everyone will have is if they change the statutory price of gold from $42.22 to today's price or some other level, will that put a floor under the gold market at the new level? Well, we don't know that, but obviously a lot of gold bugs, myself included, wouldn't object if the price of gold is underpinned by a new statutory price from the Fed, or not from the Fed, from the Treasury. I happen to be an owner of some shares in Newmont Mining, so I'd be very happy if it went up to any figure above where it is now. I'm showing a little bit of let's say a little profit at the
Mm.
moment, but yes, of course, if the gold price gets revalued, and this is the important point, underpinned by a bid from the Treasury, because that's really important, that it's got to have the bid as well. Nobody's going to sell the gold for less than the bid anywhere on the
No.
planet, and that means the gold mining shares would do very well. One of the things I've learned in my 50 years of investing is to heed warnings. And I suppose most of my career I didn't heed them. But the one which resonated most in my mind was prior to the 2008 global financial crisis. I was reading in reputable newspapers like the Wall Street Journal and the Economist about the impending housing price crash. They were giving specific examples of these loans which were being made to people who had no chance of ever repaying them. And they said it's going to be a big problem. This is long
Mm.
before it actually was a problem. And you know what? I read it, shrugged my shoulders, and carried on investing.
Yeah.
But now I think if I hear a warning, I pay much closer attention to it. And I think the world is getting a warning about the fiat system, the rising level of distrust in
Mm.
our central banks and the ability to manage the nation's money supply and manage the nation's debt. That's obviously not the central bank's role to manage the debt. But it does seem that governments have lost control of the financial system. They're basically on a borrow, 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 and there's no end to it. Well, if a small amount of money leaves the stock market, which probably represents 60, 70% of people's portfolios globally, and moves into gold, which probably represents 1% if we're lucky globally, it could really spike the gold price. And of course, silver is only, the above ground supply of silver is only 1/10 of that of gold, and platinum is only 1/10 of silver. So any money moving into the precious metal sector could spark them all big time. I don't think I've ever had confidence in the labor statistics. They revise these numbers almost every month. They revise the previous months down. And the fact they revised the earlier months down by 258,000 jobs and then said, we've got an increase of 73,000. Well, that's an increase of 73,000 on a number which they reduced, a previous month number, they reduced by 258,000. So actually, the reality here is we've lost 212,000 jobs. We lost, they've sorry, 200,000 jobs. No, I've done the maths wrong. 190, 180,000 jobs, something like that. Those, if because the effect of revising down the previous month's number makes the current number look that much better. So they're very lucky that they got 73,000 when they should have been rewarding a loss of 180, 190,000. But to keep pace with immigration, they need a positive number every month of about 100,000.
Well,
And that's not happening. The other figure, which was pretty awful, was the household survey. That came in, I'm just looking here if I've got the figure, but it came in with a pretty awful number. The household survey is another jobs survey. It says I just read this, the household survey, which forms the basis for unemployment rate calculations, showed an even more concerning decline of 260,000 workers, while labour force participation rate dropped to 62%, its lowest level since November 22, 3 years ago. It's more alarming. The average duration of unemployment jumped to 24.1 weeks, the highest since the COVID pandemic in April 22, as it was ending, suggesting that the job market weakness is becoming entrenched rather than transitory. Well, we're seeing that rates remain elevated for 10-year bonds, for example, or 30-year bonds, they're rising. So despite multiple cuts all around the world in interest rates, the longer-term bonds are not reacting because people are saying these cuts aren't really reflecting the reality of things. What we're in is a world in which the amount of government debt continues to rise and a world in which the amount of money in circulation continues to rise. And therefore, if I'm buying a 10-year bond, I don't want to get a 2% yield. I want to have a 4% yield or a 3% yield. I want a higher level of yield to compensate me for the fact that you guys are printing like there's no tomorrow and borrowing money you can't repay.
I wanted to look at another article which tells me that people are losing faith in bonds. This is Japanese Farmers Bank vows caution after 12 billion loss from Treasury's bet. So that's the Norinchukin Bank. Yeah, new chief says cooperative known for voracious buying of U.S. debt had taken positions that were too risky. So I think it's not only treasuries, but also JGBs. I think people are going to be a lot more cautious. I would say, Clive, in, maybe 2 years, but definitely in 5 years' time, this 60-40 rule that you have to hold 60% of assets if you manage money in stocks and 40% in bonds, that's going to be out the window. And I think gold, silver, and what they call alternative assets are going to be a lot more important. You probably pay now like $12 for it. So you can do the maths. So it's about, a fifth of that. So about $2.50, the silver amount of the dime. But anyway, Chris Conman, thank you for your super chat. If gold is revalued to 15,000, will Newmont stock shoot up to 300 overnight? Thanks. Yeah, I think it would. It would shoot up quite high. Right now, it's trading around 63, 64. And I think last year it bottomed around 30. And I have some Newmont, and I think it looks really bullish. I think 100 is a realistic target, as is. So I personally would say that if they revalued it to 15,000 overnight, yeah, it would be quite dramatic for not just Newmont, but all the other miners. CAD 1050. What's your thoughts on UK Royal Mint DigiGold and DigiSilver? They say it's fully backed by gold and silver in their vaults.